Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's break down today's market price action. It's Thursday, December the 19th. Let's get into it. As always, we'll be taking a look at broader market analysis, then break it down into what the sector heat map analysis is telling us, and take a look at the news. And then we'll take a look at some possible opportunities ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into market analysis, let's just jump right into the headlines and the numbers today. And again, today we had a bit of a inside day. We had a massive move yesterday on that sell-off. So you can see that the markets remains under pressure after that yesterday sell-off. Another thing to take a look at is the bond yield, especially those longer term bond yields like a 10-year, 30-year. We definitely saw a big rise in those areas as well. We'll take a look at the charts. Now, if we just look at the numbers today, I mean, it was nothing compared to what we saw yesterday, but a bit of a lackluster day today. Again, Dow Jones mostly flat. We have S&P slightly down. Qs, I think, are in the ideal way where they're down the most, 0.45%. Oil was down. And we have the gold, which was slightly higher. So let's just take a look at the charts where we are. You can see that yesterday we had a nasty candle, which really caught a lot of traders off guard. This was more like a liquidation event where, a lot of people got stopped out of your position. And again, that's where we get this, big ugly candle close at the lows. So, after yesterday's close, we usually see a bit of an inside candle. A lot of times we get this sell off and we see, maybe buyers come into the markets, and I didn't really see that. And we take a look at the candlestick today. We did go higher a little bit, but then end up closing lower. So this is again not a good sign, especially if someone's just looking for trying to buy the dip here. I think we just got to be a little careful here as we are heading into this holiday period. So it's kind of ironic it happened just when everyone is thinking about a Santa Claus rally. Here we are getting this kind of price action. So something to pay close attention to. It's just not the S&P, but if you take a look at outside, here we are, the Qs kind of looking the same. Here we are with the IWM. You can see that this thing was already looking pretty weak, and we got a big flush down here. And then look at the Dow, which again was on a historic, climb. Stair stepping down lower, and again, still not a bullish candle today. So overall, again, market looks a little bit more in trouble here. So if we just take a look at the advanced decline ratio today, again, it was a little better than yesterday, but still, they got 62% to the downside, 34% to the upside. And this must be a worst market breadth. We're looking at 25% to the upside, and then 75% below the 50 moving average, which again, looking at where we are, how we're going to close out the year, is still a pretty stellar year, minus what we lost in the markets yesterday. It's still a pretty stellar year, but for a market breadth perspective, it was looking pretty worse here. So here's the sector heat map analysis. You can see that mostly red. We did see some of the big stuff that did bounce a little bit here. NVIDIA, Apple, Amazon, Netflix, we got the financials, Visa, JPM, they're kind of looking a little better here. But outside of that, you can see some of the big stuff like Tesla, it's still kind of looking a little weak here, after this big sell-off yesterday. We also have the Google and the Meta kind of mostly flat. So again, I think this is a great period just to kind of step back and then take a look at where we are in the markets, and most importantly, plan ahead January where we can go. Is this a buying the dip opportunity, or is this going to be something starting out much on an ugly note next month? So I think that's something we gotta prepare here for. So I don't have a whole lot of picks today because again, don't want to be jumping on anything new, especially in the next couple of weeks here. Let's just take a look at a couple of charts here. And some of the charts that I want to focus on here is, we know what's happening in the equity markets, but let's just take a look at what's happening, in other markets. Take a look at Bitcoin. Bitcoin has now fallen below that 100K mark here. So we're seeing that bit of a slide across the board as far as the sentiment goes. But again, take a look at the longer term bond yields. So we're going to take a look at the 30-year and we'll take a look at the 10-year. You can see that 30-year broke out to kind of new highs here. This is the daily chart. So we are back to the levels, that we had over here. So getting towards some key technical levels, here's the 10-year. You can see that this broke above that 4.5 area, which again, I was kind of paying close attention to. So is this going to be a headwind for the markets? Again, could possibly be. I mean, here's the chart here on the 10-year bond yields. You can see that we got a bit of a big break here. So again, this is happening more on the longer side of the yields. If you take a look at the shorter term, like the 2-year, you can see that 2-year is not really having the big rally. But then if you just start comparing the short term to the long term, as you can see that we were inverted, as you can see, for the most part, and we did re-invert, and here we are, sort of kind of getting a bit of a rally here. So this is kind of interesting. You would expect the yields to sort of come back down as the economy is in a good shape, as the Fed says. I was hoping or expecting maybe we will re-invert back to the 1%. But again, if you take a look at it here, we are kind of running up towards the highs here. So it's kind of interesting, as we look at some indicators, some recessionary indicators. I kind of find it interesting that we're getting this rally in this long end of the yields here. So if you just take a look at things like TLT, you can see that we're just getting hammered going into this year end here. So a bit of a big sell off here. Now, what that's telling us, is it just the typical end of the year move? Again, this could be anything, but that's why it's important to watch the next 2 weeks. Even the high flyers, there are, you're not really seeing big buyers coming in. Gold had a stellar year this year, and you can see that the gold is kind of looking in trouble here as well. So maybe this is where, again, I think we're gonna start focusing on a lot of things starting January, where take a look at what the bond market's telling us, take a look at what the market breadth is telling us, and then make decisions accordingly. So the next 24 hours, we're in the final stretches trading week, and then we go into the holiday week next week. I think we'll probably consolidate here. Can we sell off here? Historically speaking, this is more like the bullish period where we do see market rally. But again, can we see this year, or do we just continue sliding sideways? Again, I think, but right now the lack of buyers sort of concerns me, as we're not really seeing big buying coming in. So I think we'll probably just consolidate here, or kind of stays weak. But overall, if you think about it, we still had a pretty stellar year. The market's still going to close out a pretty bullish year. So I don't think I have a concern from the market performance side. I think in the next 2 weeks we just might not see that much of activity that you want to see. Now, economic reports, not a hell of a lot next 24 hours. Earnings, we have CCL. That's the one I'll be watching. But outside of that, I think this is a great time to sort of readjust your portfolio or keep the powder dry. If we're not sure about where the market's going to go, or, I was more preparing for this kind of market movement as we go into January. So the fact that we got it just before we get into New Year's just kind of makes it a little, ahead of, caught me off guard as well. So I think we just have to kind of take a look at it and see where we start, 2025. So that's the focus here. Happy trading. We'll see you in the next one. Take care.